Okay, welcome out to the Federal Reserve announcement and the reaction to it, I should say. This is Coach T from TackleTrading.com. Want to do a quick video kind of showing you what I'm looking at here, guys, in response to the Fed. Let's start with the Trade Center tab at Tackle Trading. Quick way for you to get a visual from all of the different charts and also economic reactions. I'm going to click on the news first. And, you know, today was Fed Day. It's December 16th. And this is one place where you can go. FOMC raises the target Fed funds rate, and they did it from to 2.5 to 0.5, so they did go up that 0.25%. This is not a surprise. This is what was expected. 82% of traders in the futures market already predicted that they were going to raise it 0.25%, and they did in fact do that. The immediate reaction to the market's actually kind of settling in here. We'll get to the charts on that in just a minute. If you do want to read the Federal Reserve announcement itself, go into the earnings calendar under where it says Forex calendar, and that will launch you into Forex Factory. Open up the folder from the federal funds rate and go to the Federal Reserve latest release right here. This will allow you to read the policy statement itself. Now, this is not the full release of everything. This is just the quick press statement kind of thing. Here's our December 15th, 16th meeting. Let's look at the PDF and let's go through this. It's going to be a short one, but I'm going to help you interpret that and help you understand it. Let's take a look here. Federal Reserve. Okay, information received since the Federal Open Market Committee met in August suggests that economic activity has been expanding. That's what we've been seeing. We didn't see those numbers in the ISM report necessarily, but we did see that with GDP and jobs gains and all that kind of stuff. The unemployment rate is actually at 5%. They couldn't ignore the data any longer. We knew they were going to pop it up just a little bit, pop this 0.25% rate here. We'll get into 2016 expectations in just a minute. Labor market conditions, job gains, declining unemployment, things they were targeting. Inflation has continued to run below the committee's 2% longer-term objective. That's where they like to keep it. Anything too low, they get concerned about deflationary prices. That's what's been happening in oil. We're not going to go all economics on you right now, though, but we're just going to kind of react to this. The committee seeks to foster maximum employment, on and on and on. A lot of the same stuff they talk about every time. Inflation ranging. And the committee is, let's see here, where's this? Right here. Okay, this is the big one. So given the economic outlook and recognizing the time it takes for policy actions to affect future economic outcomes, the committee decided to raise the range for the federal funds rate to 0.25 to 0.5%. Oh no, a 0.25 point raise. So the market can sustain that. And, you know, obviously this has been built in. It was already known. It was already priced in. They call it, the efficient market theory for a reason. We already kind of knew that. They're going to try to get it back up to closer to 1 or 2 over the next year, and it's going to be harder for money to come by. The actual impact of the fundamental shift in the way we view money will take some time to play itself out. We'll get to the immediate reaction here in a minute. Go ahead and go through the federalreserve.gov monetary policy statement if you want to read the entire thing, get a feel for how they talk about economics. They kind of explain why they did raise it a 0.25 point. Now the fun part, let's get to the market. Here we are 18 minutes after the announcement. When you trade in the news, you don't want to get in there and compete with algorithms. You don't want to get in there and overthink that first candlestick. I usually tell people when they're a trader out on Main Street somewhere, wait for 15 minutes. So we're now 19 minutes after. The market is stable. You had the algos come in, trip the bottom, trip the top, and here we are kind of fading up. It looks like the market would strengthen and stabilize through the day. Going to be an important thing to watch for the next hour and a half to see how the markets close. The U.S. dollar tried to rally initially on the news. The impact should be a rally here. You would think that the dollar would strengthen, with monetary policy going up here. We didn't get much of a rally out of it. It's not a good sign for the dollar. I'm going to be watching this very close as we move through the end of the day and also in through the Asian markets tonight and then the European markets tomorrow. If the dollar can't, rally on this news, it would be a very bad sign for the short-term outlook of the dollar. Crude oil on this news is breaking down further. Okay, you've got support down here at 35.60. It's showing pressure. It has been down ferociously this week. You know, we talked about crude in the commodity report, the breakdown reacting to OPEC later. This is a breakdown potentially setting up. In fact, could even be a day trade if you can break support there at 35.50. And gold, and there's a lot of talk about gold lately with the dollar, reaction and interest rates reaction. People who do trade the precious metal have been very much focused on the federal funds rate. Raising interest rates is assumed to be bad for gold. We are seeing some pressure midday here in some red candlesticks. The reaction is not initially good for gold, and it looks like it's fading, going to be coming back into a range. See, the markets always react, guys. They always react to the news, and they process it. And when you're in the middle of the day, you have the potential to trade some of the news. Short-term day trading with futures or Forex or speculative options isn't for everybody out there, and you have to know your role in your portfolio and your goals and what you're trying to accomplish. But watching the Fed here today, we are getting a little bit of action. Quite frankly, not as much as you might think. The market's only 0.5%. The dollar is flat. Crude oil is down. Crude oil is probably the one that you're getting some action from here, and pressure in crude. Gold also kind of showing some weakness midday. Okay, so as we move forward, also remember a big one to watch is the volatility index. Volatility spiked up to 26 on Monday when the market was showing weakness. We've now been fading back in here to 19. If markets show stability, it's a great time to do cash flow options strategies from the VIX. Okay, guys, this has been Coach T and a market reaction to the Federal Reserve's FOMC policy statement. Over at Tackle Trading, we do provide a lot of that kind of insight and help in interpreting these markets and learning to use the information from the market to go out there and make decisions. If you're not a member, go find us, tackletrading.com, join our team, and get in the game.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.